Guys, now is the best time to buy call options. As we can see on our screen here, implied volatility percentage, implied volatility rank is very, very low for a lot of tech companies. As option sellers, we love to sell options, sell puts on stocks like AMD, Apple, Amazon, but there's just not enough premium for it to be worth it right now. As we can see, a $78 cash gear put, it's only going to give us $22 a premium. Why is that? It's because implied volatility is very, very low, especially for a lot of the tech stocks. So, what is the play to do here? It's either to do call options or a call debit spread. Because remember, when implied volatility is low, it means the contracts are going to be very cheap. As we can see here, very, very cheap contracts. But for 2023, 2024, we are bullish. And especially since AMD has a very low implied volatility, it means call options are going to be very cheap. And since I'm bullish for 2023, what I want to do is buy a contract out, maybe almost a year out. So we do have a one call option for the $50 strike, expiring January 19th, 2024. Very, very good call option in my opinion. I'm up a few $1,000s on it, but implied volatility is very low, so we can easily buy some more call options. Maybe another one of these $50 contracts, or we can even go to like a $60 or $70 strike. But take advantage of the low implied volatility. If you want to get into call options, now is the best time because implied volatility is low. Your contracts are going to be very cheap. And the stock doesn't even have to move upwards for you to make money. If implied volatility rises, then your contracts are going to make money as well. So you want to take advantage of how low the implied volatility is. The IV rank for AMD is 4%, which means it's pretty much the lowest point of the year where of implied volatility. So we do want to take a look at other stocks such as Google, Apple, Microsoft, which have very low implied volatility as well, even Intel and Ford and Amazon. So a lot of the great tech stocks, even though they rose a significant amount in the past weeks, we were able to buy call options on the discount, which is very, very sweet, and it has the potential to make you a lot of money in the long term if you hold it out. Now, of course, if you aren't bullish and you're bearish, you want to buy put options because the put options are going to be very cheap as well. And there's a potential for you to make a ton of money depending if you're bullish or bearish. Buy your calls, buy your puts. You can double, triple, even quadruple your money in 1 year if it goes in your direction.